everyone, John Henry here, slingshotfutures.com, and welcome to the market psychology video where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today we're taking a look at the crude oil futures. Now, crude as a whole had a pretty interesting day. We had a lot of ranges and not really a whole lot going on, and it looks like we're going to be ending up pretty much right in the middle. But coming off of the weekend, we started off opening up here. We had an attempt to the downside. It didn't really get a whole lot done. They tried it again, and they finally gave up for a rally back up. But notice what happened here, and then again what happened here, right? They made that big peak up. They tested it again and failed and reversed. The same thing happened at the highs. They moved up to the top, they pulled back, made a quick little test of it, completely failed back down. So we're starting to think, well, you know, maybe if this does go back up towards the highs, there's a chance that it tries to break out and continue, but this is a rinse and repeat that happened on the bottom. It's the exact same thing. And if this is going to be a rinse and repeat, we could easily find ourselves right back at the lows again, just like sitting down here, we found ourselves back at the highs. So when we got that initial pullback to major support, this is a retest of the earlier range highs. You have daily support coming in there. Everything is saying that it's at least worth a bounce to the upside for an attempt, and that's why there's a buy signal there. I'm not a huge fan of that one, in all honesty. If you could have gotten it at a really good price, then maybe. But given the context and the failure that we're seeing up here, there's a lot of clues to believe that if this rally does continue to the upside, we may break out, but we may just have another quick test and a failure back down to the low a day. So I have it marked up because it is a setup that I know a lot of folks will have taken. But overall, I'm kind of 50-50 on it. I'm not super pumped about that setup, just given the context. We ran into the prior high of day, dead stop smacked right in its tracks and turned right back around, and that's where the sell side started kicking in. The buyers started trying to come in and defend. They failed, turned back down, and that allowed the sellers to hammer the market to the downside and really just gunning for that low. Now we catch a short-term little bounce right there off of that same level of support, and we have a very weak bounce. Notice the difference, right? This one comes down, tests it to the tick, and just rams right back up towards the highs. This one, the bear candle breaks through it. The bulls try to come in, but all they manage to get is a candle that looks like this. That is not a bull context. And when it starts turning back around again, that offers up another selling opportunity to try to drive the market back down to get those lows, and we finally have hit the bottom. Now, this may be the bottom in the short term, this may be the bottom in the long term, but either way, this is the nice thing about getting these rinse and repeat type patterns where you have the breakdown, they try again, and then you have a huge rally to the upside, a break up, and they try again and fail. It's the same thing. So if we get the same thing over here, I'm going to be thinking the same thing, right? We're going to be looking for that reversal back up towards the highs. So it's really just using the past information to our advantage to give us a context of what to expect in the markets. And when it's confirmed by movement, jumping in can be some pretty good setups. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, maybe a little bit entertaining and useful, and we'll see you next time.